The title of this video is not clickbait. 6% treasuries are here. Well, 5.964 to be exact, but if we round up, that's basically 6% APY. And the big question everyone's asking is why? Is 6% now a truly risk-free rate? Or is there potential danger looming in the future? So to answer those questions, let's dive right in. For starters, the US has a lot of debt, almost $32 trillion. So to raise money, the US government will sell treasuries and offer special perks to find investors. And Treasury bills, otherwise known as T-bills, are one popular method where you can lend money to the US government in return for high interest rates and tax benefits. Namely, the interest you earn is exempt from both state and local taxes. And these two benefits make treasuries incredibly attractive to all sorts of investors. High-income earners, corporations, and even foreign governments love to gobble up these securities because they're fully backed by the US government. So as long as the US continues to pay off their debt, T-bills are considered a risk-free return. More on that later. And because you're lending money to the US government directly, they're much safer than traditional banks. I can actually deposit millions of dollars and I don't have to worry about a Silicon Valley or First Republic Bank collapse. My money is fully insured by the US government even beyond traditional FDIC limits. And with other regional banks like PacWest and Western Alliance continuing to struggle these days, there's a lot of comfort to be had with Treasury bills and investing with the US government directly. Even better, they're paying significantly more than traditional bank accounts. For example, the last 4-week T-bill is offering 5.964% APY. That's incredible. The last 8-week T-bill is offering 5.537% APY, and even 17-week T-bills are offering well over 5%. And compare that with Capital One. They're a very popular bank, but their high-yield savings is only at 3.75% APY. That's a difference of 200 basis points. Pretty significant difference there. Now yes, treasuries have a steep learning curve to buy and earn those amazing yields, but thanks to today's sponsor, Public, they make it incredibly easy to earn 5% APY on government-backed treasury bills. That's way higher than your typical high-yield savings account. Plus, T-bills offer a guaranteed fixed rate, so you'll always know how much interest you'll earn before you purchase. And Public just launched Treasury accounts, a quick and easy way for you to buy these bills directly on your phone. Plus, your T-bills are still government-backed, and you have the added flexibility of no settlement delays. And with Public, they'll even automatically reinvest your T-bills at maturity, so there's no work on your end to continue earning and raking in those high yields. So I got a simple shout out today. Go to public.com/EricTang to start earning 5% APY on your savings. And you're guaranteed those rates as long as the US doesn't default on its debt. Fingers crossed that doesn't happen, right? Again, that's public.com/EricTang to learn more. So if Treasury bills are offering such amazing rates right now, how is that possible? Especially since just a week ago, 4-week T-bills were offering less than 4% APY. That's a pretty big jump in just 7 days. And the answer is, the most recent T-bills will be maturing after June 1st. But why is that such a significant date? Well, that's the day that the US government could legitimately default on its debt. And that's not my words. That's directly from Janet Yellen herself, the Treasury Secretary. And if the US can't pay off their debt, your money would not be safe anymore, including the money tied up in banks and even treasuries. And right now, with the Republican and Democratic parties bickering for power, Congress has not passed a bill yet to raise the debt ceiling. And if they don't, the US defaults on its payments and treasury bills will carry a lot more risk. And with more risk, it's natural for investors to demand a higher return. And today, the bond market is sending signals about the probability of a short-term default, potentially even lasting just a couple of weeks. That's why investors are demanding a 6% annualized yield on 4-week T-bills since Congress simply just hasn't gotten their act together. And because of this, it's really easy to claim that the sky is falling. A default is inevitable and this is the end of the US government. A recession will occur and economic catastrophe will result. But personally, I believe it's near impossible for the US to default on its debt. Treasuries have a reputation for being amongst the safest investments across global financial markets. We have one of the most stable and productive financial systems, and there's a reason why foreign governments and international companies prefer buying US debt over other countries. And if we talk about worst case scenarios where the US does default, it would send ripples across global systems and your savings would essentially be worthless. The public holds about $25 trillion of the $31 trillion debt, with the majority being Social Security, pension funds, insurance companies, and deposits from everyday citizens. And it would be extremely unpopular if the government ever refused to pay off Social Security funds, because that would piss off all current and future retirees. Heck, I wouldn't even want to pay off my Social Security taxes if I'm not promised anything in the future when I get old. That's just ridiculous. Additionally, the US dollar would likely lose its status as the world's primary reserve currency, and US companies would severely lack the ability to raise capital. Stocks would fall, hurting every working individual in America. Plus, American influence on other countries would dwindle. Although many Americans believe that China or Japan owns the majority of US debt, it's actually the US citizens who are owed the most. As a result, they are the most at risk if the US does default. But on the bright side, I'd say that every rational politician understands the drastic consequences of a US default. It would forever negatively affect the lives of every US citizen, if not every person here on Earth. And for that reason alone, the US government would avoid such a situation at all costs. There's been countless times in the past when US debt has ballooned, and each time the government agrees to raise the debt ceiling or reduce spending. I don't see that process ever changing, and in fact, some amount of debt is essential to maintain a healthy economy. So in my personal, uneducated, and maybe even naive opinion, I think US debt is primarily used as a political tool to put pressure on leadership. Both parties understand that the American public would be terrified of a US default, so they use it as leverage to pressure the other side to make concessions. And even Senator McCarthy himself acknowledged that the US would not default on its debt, but they do prefer cutting spending and raising the ceiling. So I think it lends further credence that the US government will always try their best to avoid such an outcome. But to be fair, I could be totally wrong, and politicians do allow the US to default and a deep recession occurs. But personally, I wouldn't bet on that possibility. But I'd still agree, we do have a lot of debt and changes in spending are long overdue. But for a default next month, I personally just highly doubt it. And I'm not alone. Many investors are still buying up Treasury bills and taking advantage of those elevated rates, believing that a default is probably not gonna happen. Heck, even Warren Buffett himself believes that the US will never default on its debt, and he's just way smarter than I'll ever be. So as for my thoughts, I'm still buying up treasuries, and I'm quite happy to earn these 5 to 6% yields while there's still uncertainty in the markets. But as always, I'd love to hear your thoughts about 6% treasuries and whether you think that the US will default on its debt. Of course, if that does happen, you're also welcome to roast me in June for how stupid I am in believing in the US government. But regardless of what happens, I'll still be here and subscribe for more. Take care, be safe, and I'll see you in the next one. Scary world out there, man. Really scary. Hope you're all safe. Hope you're earning 6%. All right, take care.